In the energy quadrant, CME WTI crude oil futures, the September contract, traded below $78 a barrel for the first time since June 17th. Now, the low today, 77.55, was down 1.33%. The high was actually 79.13, which was up almost 0.7%. And we got back off the lows quite a bit by getting, with a little bit of time left in the session, to only down 0.33%, well up above $78, but that doesn't dismiss the fact that we got below there for the first time since June 17th. This is the third straight session lower for crude oil, and the second session where WTI futures closed below the 200-day moving average. The last time we had two closes below the 200, the futures closed below that 200-day moving average for the next 30 sessions consecutively. Analysts report today, according to Reuters from Morgan Stanley's well-respected commodity group, is targeting the mid-70s range for crude oil going forward. They didn't specify, but they usually mean Brent crude, which would mean even slightly lower for WTI futures than that. The note says that the fourth quarter of 2024, the market would be balanced when seasonal tailwinds would abate and both OPEC and non-OPEC supply would return to growth. Next year, the market will even tip into a surplus amid rising supplies from both OPEC Plus and non-OPEC producers, according to the bank's commodity strategists. Now, China also surprised the markets by cutting its major short-term and long-term interest rates to try and bolster the economy. Now, they're cutting the 7-day reverse repo rate and the 1-year prime rate, which worries markets into thinking the Chinese economy is in worse shape than previously thought. That weighed on all commodities today, and crude oil was not immune to that, as you saw in today's price action.